Welcome to Marantz Rantz, no advice on finance. Spin the wheel and take a chance. Get an NFT and a little education. The system got undertold, that knowledge is flotation. You wanna learn? Well, you came to right place. You're pumping AMC, might get slapped in the face. Get your due diligence, know who the villain is. Don't be a sheep when the shepherd's carnivorous. So come learn, laugh, and maybe you win big. And listen up, y'all, the wheel is not rigged. Everybody get a chance in the live chat. Kyoto spin wheel, you win just like that. Retail fight back and this retail winning. Y'all just wait, man, this is just the beginning. All fellow simians, GME group singing the truth. We just chillin', infinity pool swimming. So welcome to Marantz Rantz. A lot of knowledge but no advice on finance. Don't even need pants, you can tune in naked like Henny the Mayo Man. Internet's most hated. Don't wanna lose your money, then it's time for you to listen. If you're ignorant, invest in AMC or Superstition. The stream about ready, they told us to don't dance. I do what I want. Welcome to Marantz Rantz. 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 Welcome to Marantz.
You know what it is. You know what they say? They say you're going to hustle until you don't have to introduce yourself anymore. And I made a conscious effort last night when I was talking to my wife. I said, Mama, I'm gonna do more. And I meant more YouTube, more production, more topics, more opinions, more pieces. So if you're a supporter of this show, I want to thank you, but you're going to see a lot more of me. And I might touch on topics like the Roblox topic or open door technologies, things that are relating to investments that I can tie still back to the world. I won't be like scatterbrain. I won't be sports. I won't do that. But you're going to see a lot of me. I'm just going to tell you that. Shout out to Trove. I see Trove right there. My boy Trove finally drove in a Yukon Denali. He's like, "Yo, Marantz, this truck, man." I'm like, "Yeah, I know. That's why I don't have one, because you'll fall in love with it and you'll be driving it around forever. That's luxury, man. No way. I live it rough." But yeah, so you guys are gonna see a lot more of me, a lot more live streams, a lot more content. I've told my wife I'm gonna make a conscious effort. So I hope you guys like that. So that's out of the way. Hi, welcome back. Welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. Still have to introduce myself until I don't one day. We're going to do a breakdown of quarter two. GameStop quarter two tonight. I actually have it lined up to where we're going to go over a lot of things. There's a lot of education on this damn show right now. I've been studying my ass off, but I do it with you. I don't do it before you get here. I'm literally going to read SEC filings to myself in front of you. I'm going to take notes. I have my pad here, my notepad. As you can see, there's a lot of notes there. I write things down and I tell them to myself, like the notes for this show are right here. And it says, hustle till you don't have to introduce yourself. That was my notes. That's the truth. Hey, that's the note. What can I tell you? Anyway, I'm a man on a mission, so maybe a calling from God. Who knows? I'm just trying to have a new outlook on things and trying to stay positive. Not that I have things to be negative about. I own GameStop. GameStop is one of the greatest investments right now available to you on Wall Street, and let's talk it out. So let's talk about a lot of things. I have so many people ask me, Marantz, what do you invest in? I hear you do finance. I hear you know this. I hear you know that. And I'm just like, yeah, I know a little bit. I know enough. I know a lot about GameStop. I know a lot about those other distraction stocks that I try not to get involved with. But I get to know thy enemy before I actually come in here and position myself on one side. And right now, GameStop's the only investment I'll ever make moving forward. And it has been this way for 4.5 years. I've been buying GameStop for 4.5 years. Ideally, it's $20 to $25 a day every trading day. Every calendar day, if you average it out, it'd be like $18. But I'm in for over $30,000 on GameStop, which is a lot of money to me. I came up from an impoverished part of town where we didn't have shoes growing up. We were barefoot. Even all through high school, I wore $15 pair of shoes for the bulk of it. I mean, there's just a lot. I didn't have what you guys have. And, my father worked really hard for us. And they eventually got promoted. My mother did too as we were getting older. but I didn't reap any of that. I didn't see any of that, and I moved out at a very young age, and I had 3 jobs in high school, and I grinded. I joined the military. I've picked up every odd end job that I could, and I started from the bottom every time. And I'm not going to shy away from that. That's life. Sometimes you make decisions that aren't going to be favorable for you and your family or yourself, and you learn from them. I've learned from them in the past, and I'm still learning today. Not that I'm perfect. And that's where I'm at with life. Just showing you exactly where I'm at with life. But as far as investing goes, man, it's been a learning curve. You might think, like, if you're on the outside looking in, like, hey, man, I know what to invest in. I was told, I read, I read headlines, buy gold, buy precious metals. That's all you buy. If you're going to invest, you're going to do the Mag 7. You're just going to do an ETF and get out of the way. And that's for a lot of people. That is. And for the uneducated people on markets or the ones that don't want to take risk, then this is not the show for you. We educate ourselves on what the markets are doing and what value is. There's these metrics, they're measurables, right, that you value and that you place upon stocks. And as you get older and as you keep living through it, this timeline, you find out, what makes sense for you might not make sense for someone else. So when that's being said, I can't fault anyone for running away. I make these videos where I bash people for not supporting GameStop, not being all in on GameStop. And the truth is, that's just me. That's me in an ego for GameStop. I'm basically like the Kanye West of GameStop because it just means you might be a mad genius. You just never know. But I will tell you this, I'm extremely dialed in on my investment. And for people that come in and they half-step it or they half-heart it and they don't give it all, I'm not with it. I'm almost like Kobe Bryant, where he won't pass the ball to Smush Parker and Kwame Brown because he's like, nah, they don't work hard enough. I felt the same way. I feel the same way. So when you see other people walking off the map here, people giving up on GameStop, people giving up on the platforms that they've built and or the partnerships and the families that they built, I only feel one way about it. And I feel like if you're going to quit now, then why'd you ever start? If you're going to start something, finish it through. And that's life. That's life. That's why when you pick a partner, you roll it out no matter what. It's through sickness and health and until death do you part. Some people can't get past that part, but a lot of people don't know how to say they're sorry. A lot of people don't know how to wear their pride. You got to take it down every now and then. So I've had to plenty of times, and I just found the right partner to do it with. My investment side, I've lost plenty of money over my years that I absolutely made back tenfold. And I recently am celebrating a couple of milestones for myself that I had put out for myself. Like, I never thought I'd get to $30,000 cash into GameStop. Never. Because if you start today, when do you think you'll ever hit 30? It'll take you 4.5 years. And you're probably like, that's never going to happen. It's so far away. And the truth is, that's just high school. And you probably don't remember high school like me. I don't remember a lot of it. But that's been the investment. So I just want people to understand like what it is and what it takes to be in this seat. And yeah, I've got plenty of bumper stickers, bro. But we're going to go ahead and break it down. Because, people ask me all the time, how do you invest? I say, download an app. Go to your phone, go to an app store, and download Robinhood. Download Webull. Download Fidelity. Download Charles Schwab. Download anything. I don't care. I'm not particular that way. I'm not, you have to DRS. I'm not forget Robinhood. There was a time where I blamed Robinhood for a lot of things, and that was just my ignorance. That's not what this market is, and that's not what these investments are. Once I found out the way private equity really maneuvers and operates, and then you realize there's a correlation. The market reacts to whatever private equity wants. And I knew that just going in. Now that I see like companies like Open Door Technologies, made a video about it. Everyone wants to complain about the CEO and saying she's a terrible CEO, but she didn't get there till it hit rock bottom. Then she built it back up and it came back down. It got shorted again, just like it should. And it's a failed company. It's a terrible company. It's operating on like 8% margin. So how could you ever find value in it? And now here comes private equity walking in saying, we demand change. We want a different CEO. This thing's going to the moon, and it's a meme stock now. It's like, I've never even heard of it until now, but I knew that it was a SPAC launched by Chamath. And so, of course, let it all come out now. So there's just a lot, okay? But we're going to love this coming up right now for GameStop, certainly tonight. But before we do, let's announce a couple of things. First, GameStop earnings coming out. We're going to show you just how much money GameStop's going to make this quarter. Based off of Wall Street predictions, they're saying GameStop's coming in at $900 million on revenue, which would be an enormous plus. And I don't even know where they get that number from. I don't know how, because they've closed over 1,000 stores since last year to this year. But we're going to work all this out. We're going to talk it out. But I don't know what the hell they're doing. If it's 900 million, that's an amazing number for quarter two. And without 1,000 stores, and to be at that price, and then with the margins we have a lot to look forward to. GameStop has a partnership. If you guys are like new to this and you guys don't know what GameStop is doing, this is the time to start watching the show. Enough of the small talk. Let's talk GameStop. All right, buckle in. All right, so GameStop is a gaming company to some people. It's a collectible company to most of us. Most of us that go in there and shop at GameStop, we're looking for collectibles. We're looking for Pokemon cards. We're looking for anything that we can get our hands on that will appreciate in value. Video games being there, sure. Consoles, absolutely. But this is GameStop's transition for, well, profit and better margins. We know this because the CEO told us this, and this is something that we invested for. So whether it be digitally, online with the powerpacks.gamestop.com, a whole website GameStop developed and built to go ahead and open up Power Packs. Now, I've had the luxury and the privilege of those Power Packs going live. They actually went live for me and numerous other people just the other day. So let's go ahead and look at it here on powerpacks.com. This is the website. So GameStop built this website, partnership with PSA. On the back end, it's partnership with eBay, but we'll talk about that in a minute. As you go through here, guys, we'll go ahead and look at our packs. So you can open up packs. They all start at a level. There's a certain trick to this that I figured out after opening up a couple of packs. I started doing math. I started figuring it out. I said, wait a minute. There's a win and a loss here, and there really is, and I'm going to explain it to you guys right now. So the Diamond Pack is what you can open. Diamond Pack is $1,000. For $1,000, you have the chance to hit these chase cards. Chase cards worth up to $11,000, 10 times your money instantly. Can you lose? Yeah. If you look here, the lowest value card you could get is a $500 card, $500 to $750. Now, if that were the case, if you were to get a $500 to $750 card, that means you're holding half of your value, 50% of your value that you put in initially. If you look at every single tier, Platinum tier does the same thing. If you get a bottom card, a $250 to $375, that is half of your value at a minimum. The only level that does not hold half of your value is not gold, it's not silver, it's starter. When you put in $25, it literally holds 20% minimum of your value. So if you want to gain 30% of your value, go with a silver, gold, platinum, or diamond. If you really want to risk that $25 and get it potentially back 5 to 10, 5 to 15, that's only going to be 20 to 30% of your value back to you. So that's how you have to do your math. You guys have to start, and what did I say, 20 to 30? It's 20 to 40, if I'm not mistaken. 10, 20, 40, however you want to do that math. It's 20% at 5. It's another 20 at 10, and another 20 there. So it's hard to get back half your value on a starter pack. That's my point. The chase cards, they're changing as we speak because people got some cards and didn't. But people were opening today. I saw a lot of streams doing it. This is not the pack you want to open. Okay, the starter pack, me personally, the way I'm doing my math. But I hope that those numbers work out for you, however you want to do it. Now, this website is phenomenal. For all of you guys out there that don't know this website, I have some money. It's already being paid back to me as I go ahead and I go to my, I believe it's sales and payouts. It tells me that the money's coming to me. It'll show up within the next couple of days. I did buy 3 packs. I bought $75 worth of cards. Wanted to see what it was. I wanted to get a feel for it. I felt great. I did lose some on fees here just because I sold it back, which was not a bad deal for me. Selling it back to GameStop, which was fine. So, and I love that. I now will officially be taking the GameStop fee every time. I would much rather GameStop get the profit than a PSA eBay partnership side, which I settled for on the other two. When I looked at my wallet on the GameStop side, here's my GameStop Stripe Express wallet. You get Power Packs or PSA. You go to Power Packs, and it'll tell you your money's on the way. So here, money's on the way. It's pending. $19.46. Not bad. That number will go up. As far as PSA goes, The PSA money's on its way. It'll get there, $23.40 as well. So it's on its way. It's in transit. So this is how the website works. You go to the website. You want to open up packs, you can. We'll look at that video in a minute. But, ooh, Lovey's excited out there, my dog. So these are the packs. You can go in here, find out which level you want to buy, and get those chase cards going. Platinum, gold, and silver. Great cards you can buy, but remember that if you're buying a silver or above, they're at least holding 50% of your initial investment into a collectible. And that's on all fronts. Even on football, same thing on that side. They hold 50% if you buy silver or better. I'm just telling you the math. This website's phenomenal. Not everybody's there yet. Not everybody can get to it. But this website is so different. And if you guys are watching the videos, it's a churn and burn for a lot of things. If you get a great slab, awesome. You're going to get a great PSA graded card with value. You pay $25, you might get a $500 card. You pay $50, you might get an $800 card. You pay $100, you might get a $1,500 card. Those are all the possibilities. So just stick with it if you guys want to collect. You can send it to your vault. You can sell out of your vault. There's a lot of things. But I'm going to show you these videos to enlighten you on what GameStop has partnered with and how they're doing it. This is PSA Vault. Stephen Aoki, he partners with PSA to put all his cards into the vault. And you have this option. I have the option with this card right here. I can send it to my vault address. I already have my address. I have everything. I can mail it there, and they'll put it into the vault. It'll be digitally on my screen here, and then I have it, and I never have to worry about it. If someone's going to steal it from my shelf, if I misplace it, if it gets damaged, it's where it needs to be. It's safe at home in my vault. Now, let's watch the video.
I'm not a seller. I'm a collector. That's why I am vaulting over 35,000 cards to PSA Vault. I've always had this interest in collecting things from my father. The guy collected everything. Ton of pachinko machines and pinball machines, but it was organized. That, I think, laid the kind. I was all in on cards. Like, it's all I cared about. Waking up, thinking about cards. Like, I stopped going in the studio. I literally stopped working on music because I kept thinking about cards and what I should be getting and what I should be doing and talking to. I stopped talking to artists that I was collabing with because I was like thinking so much about cards. I was already just a fan of Pokemon. It's part of Japanese culture. It's a Japanese Disney to me. I just always loved seeing Pikachu. Before I even got into Pokemon cards, I already made a song called Pika Pika in 2018 for my love of Pikachu. Pretty much all sports, all the different athletes that I really followed, I wanted to go for them. Growing up with Star Wars, I'm really just a fan of the early Star Wars because that's what I grew up with in the 80s, watching all the Star Wars. I'm a big UFC fan. I've watched every single fight. So all these things touched my life in a different way, in a meaningful way. I think all of this, like, it's me reliving me as a kid because it makes us happy. It's like when you open that pack of cards, a little kid comes out of the heart. He's like, oh, hey, let's go. Because as a kid, when you're growing up, you go into the card shop and you're like, oh, wow, there's that 52 Mickey Mantle. You'll never get that, but that's cool to see. Now, I'm a big boy. What are the big boy cards I want to get? What are the ones that I've always dreamed about that I never thought I would ever get? You know, I made some money, so I can actually go for some of these cards. And that was one of the main cards I had to get, was a 52 Mickey Mantle. Didn't matter the grade. I didn't care. I was like happy for a 1. When the PSA 6 Mickey Mantle 52 tops came to my house, and the Beatles with all of them in this card, Gem Mint 10. A 1964 PSA 10 of anything is pretty crazy. Got a stack of Jordans. I was like, I want the weirdest ones. For the deep Jordan collectors, that's what you want. And the history is so obscure, 4 years later, I'm showing it. And all those cards are going in the vault. And some of them I will trickle out so that other people will have the opportunity to own one of these Jordans. So one of them is gonna go for sale. I'm not a seller, I'm a collector. So that's why I am vaulting over 35,000 cards to PSA Vault, because I'm happy for PSA to just handle all of it. I trust PSA. I grade majority of my collections through PSA, and I am so happy to get my cards at the vault so they could deal with that. Here we are, all 35,000 of my cards going to the PSA vault. All the cards soon will be emptied out here. Lots of Pokemon, Marvel cards. We have a lot of sports all across the board. It's just a lot. It's a lot. From thinking like, oh, I'm gonna resell. I'm gonna make money on this. Because at the time I was like, I got time. I guess I can do this whole resale business thing. And then once I pivoted from that mindset to going, what are the things that matter to me? Let's go for the big grails of those big things. That was a goal. That was the journey. In my mind now, my appetite is full, which is a great feeling. Finally, my next evolution as a collector, created music, fulfilling the different musical history that really resonated with me and preserving it like sports cards and comic books and the rest of the like. This is the 61 Fleer rookie card of Wilt Chamberlain. And I actually pulled this card. Lugia PSA 10, first edition. Pokemon Charizard PSA 10, the Japanese version. Woo-wee! Oh, this is another nice one. Charizard, baby, 1996, PSA 10. A lot of the cards that are going on the vault to sell, they're doubles.
Things for me. GameStop getting into PSA graded cards and collectibles. It was awesome because that's what I grew up on. And it's like a nostalgia thing. My dad will tell you, my brothers will tell you, everybody, like we grew up just like you guys did, where there was this rush for cards in 1989 and 1990. And if you notice, the values of cards from 90 on are diluted. There's no real value in them because it wasn't because there wasn't great players. Because that timeline right there was when things were mass produced and manipulated. So after 2000, it's when the companies came up with a new way. We're going to go ahead and number the cards. We're going to keep track of them. PSA is going to grade them. And PSA is going to let you know how many are graded. I did some homework on my card here. And there's only like 9,000 of these in the world at PSA 10. Gold Star. And a lot of people are like, 9,000, that's a lot. No, guys, there's almost 9 billion people. Okay? 9,000 of these is not a lot, but the value will go up over time. And, a lot of people missed out on the 90s from collecting things. But in that 2000 time frame, like for me personally, it sucks that I didn't get to watch sports or collect things in 99 on because I was trying to live life. I was trying to survive. But GameStop's giving me that opportunity right now, and like Steven just said, for those of us that are making money in life, and we're at this new opportunity to get the things that we've always wanted. Like I've never been able to walk through a store and say I could buy anything in this store until a couple of years ago when I was like, hey, I'm an adult, I make money, I have my bonus check. What am I getting today? What could I get if I wanted to? And I don't splurge and I don't do it, but you could. You could, like I always tell my son, he's like, Dad, you want a Corvette? I go, no. And he goes, oh, is it because they're too expensive? I was like, no. And he's like, you can't afford it? I was like, no. I go, anybody could. Anybody could afford a car. Just go out in there and pay a lease and pay the insurance, and you have what you've always wanted. But do you really want it? Like for me, I want more GameStop. I'm not satisfied. My stomach is not full. My appetite's not full. I'm hungry for more GameStop, more shares. As far as collecting goes, I love collecting so I can give away. That's just been the nature of me, to give away things for free. I think since you guys started this show with me, I was originally giving away like Oculus and DS, or not a DS, a Switch. I gave away a Switch and gave away a lot of gift cards when I first started and T-shirts. I gave away everything I could. And now we have all these donations for the channel. And even, your $5 super chats, everything adds up, and I eventually get to GameStop and I spend the money and I buy more stuff for kids. and for giveaways. So right now, I'm just going to keep doing this. This is like what my calling is for me, just to enlighten kids and families on what GameStop offers. People don't even know what they're doing. Steven Aoki just showed you what PSA is doing as far as the vault goes, but that's a partnership with GameStop right now. That's why Power Packs works out so well. So this is all in front of you right now with quarter two coming into play, okay? It's a lot of boxes with high value. Yeah, well, where do you think they're getting all these cards that they're giving away, guys? People are in there shopping in the vault, and it's pretty awesome. The concept is amazing, but I'm going to show you something else where you guys need to start understanding that GameStop is a tech company. They are absolutely a tech company, and no one wants to give them that moniker. Like, they don't want to tell you that they're tech, because if they do, then the multiples have to change. They're not just consumer discretionary stock. They're a tech stock. And what I mean by tech stock is this. There's not a company out there, and I bet you everything I own, okay? Because I know, if you guys are operating in retail, the bulk of companies, whether they be Sam's Club, Costco, or Walmart, the top tier companies, they operate on DOS, literal DOS. Like for inventory controls and shipping, it's not the programs that you think. It's an IBM-driven program. It is not what GameStop is doing. GameStop has stuff that is just so revolutionary. When you can go in and scan with digital cards, they go in there and they scan with tablets. They scan, they give you value, they ship out, they do everything is just automated right there on the spot. That is next level. For you to go to GameStop's website and it's updated live inventory controls for every GameStop in the world, for 2,000, 3,000 GameStops. And you can do the PSA portion, you can sort, you can categorize, you can do everything you want to do. This company is light years ahead of everybody else. Because when you can implement new things universally, and it's a lateral move for the business, it might be lateral numbers-wise, but it insulates itself, it sets itself up for better onboarding and scale for everything moving forward. You know you can implement this idea, this tactic, this program. Easy. You have the tools to do it. You had this partnership to do it. And all it was a couple of engineers coming up with these ideas and then making the plan happen. A la Apple, iTunes, iPads, iPhones, tablets, and watches. I'm telling you, I see it as a tech company because they're implementing AI, without a doubt. The algorithm's hitting you every time you hit that website. They know what you look at. They know how you're looking at it. They get their own ratios. They have implemented everything. It's not just a big mess. They're not just throwing things up online and seeing what has clicks. That's not how it works. And I can prove that the partnership with PSA is just as big as tech as anything else. Watch and learn.
Breakthroughs in science and technology, innovations in business and beyond. Join us as we educate, enlighten, and entertain. This is Advancements. Coming up.
Thanks for joining us. I'm Ted Danson. Today's episode is dedicated to exploring the latest developments taking place across a number of industries. Join us as we discover how science, technology, and determination are working together to foster innovation.
Collectibles began in the 19th century when cigarette and candy companies started including baseball cards with products to drive sales. As the industry grew, so did the need for a reliable and trustworthy way to authenticate and grade collectibles.
In the early 1900s, tobacco companies and candy manufacturers used trading cards as a way to sell additional versions of their products. And that started the kind of collecting craze with kids that were actually acquiring these items, and that was the beginning of it. And it really took off in 1952 when Topps started making full-size cards with bubble gum.
The collectibles industry has definitely changed in some major ways, but I think the core elements of collecting, especially the nostalgia around it, has really stayed the same over all these years. However, one of the big things we've seen is a rise really of the digital elements around collecting, making it easier than ever for people to learn about collectibles, to buy them, to sell them, to show them off to their friends.
The trading card and collectibles industry has experienced a resurgence in recent years, with millions either discovering the hobby or reigniting their interest. However, until recently, the industry lacked significant technological investment.
We're seeing, some would say, a resurgence in the collectible and trading card space where people who were part of Generation X or who were millennials loved collecting back then, but maybe you couldn't buy all those expensive cards you really wanted, or you couldn't complete a set you were really going after. And then those generations are also having their own kids, and then they're getting engaged in these hobbies and these collectibles too. And so it's something that can be shared between the parent and the kid, kind of this love and passion for those collectibles.
It's taken a while for the collectibles industry to catch up with technology. This is because the foundation of the collectibles industry is expertise. A lot of this involves specialists who spent decades learning how to authenticate and grade collectibles. For a long time, they were able to keep up with the demand. This was until the boom in the volume of items that came in. So that's where technology took over.
Now, a passion and dedication for accuracy and trust are bringing needed innovation, transparency, and value to hobbyists.
PSA was the first trading card authentication and grading company. We have graded more than 90 million collectibles, and I think over the years we've shown that we've got the highest standards in consistency and accuracy in our grading.
We actually created custom AI models to help with card identification, detection of counterfeits, and multi-point quality assurance checks throughout the entire authentication and grading process. So our technology doesn't actually replace the graders. What it does is it helps them to move faster, to highlight through AI a lot of the anomalies that they may miss because they're looking at a large volume of items. So we will highlight using things like heat maps. And for collectors, we've essentially created an AI expert in your pocket.
As a leading provider of authentication, grading, and collection management services, the company provides best-in-class products and services that allow hobbyists to grade, authenticate, research, vault, and sell their trading cards and memorabilia with ease.
Our mobile app acts as a collector's personal assistant, allowing them to scan the collectible and see the population reports, the rarity and potential value of every item. It's not just about buying and selling. It's about helping collectors to make informed decisions so that they can enjoy the hobby with confidence.
In 2020 and 2021, we experienced a massive surge in interest in card collecting as an industry, and I think PSA invested a ton both in our people, our facilities, and our technology in order to scale to meet that increased demand from customers in the US and worldwide.
Leveraging emerging technologies to deliver a unified end-to-end experience across its brands, the digital ecosystem brings the best in grading and vaulting services to millions of collectors worldwide.
After authentication and grading, collectors can send their items to a secure vault for storage. So imagine an Ocean's 11 style vault with multiple layers of physical and digital security. That's actually what we built. And so the best part is that once it's in the vault, ownership can transfer digitally without the need for the collector to ever physically deal with the item again. So we had to create a digital manifestation of it that allowed people to see all of their items and track the value and look at all of it.
An online record of all PSA certified trading cards, tickets, packs, coins, and pins provides an encyclopedia of information to help enthusiasts track and grow collections.
Every item that we authenticate gets a unique identifier associated with it, and as a result, you can see the public record online, complete with high-resolution images, a population report, and more information about that collectible. A population report actually tells you the distribution of how many items we've seen and at what grades we've seen them at. This gives you an idea of the rarity of the item. What this provides for our customers is transparency.
The process of card grading can be a little bit of a black box at times, and so we're taking strides to making it more accessible and bringing people behind the scenes so that they can actually see what is going into the grade that they see on their card.
The current state of card collecting continues to merge with the tech revolution, bridging together people and technology while empowering enthusiasts with the innovative solutions needed to help their collections thrive.
There's this thing out there about every 25 years something becomes collectible, so we're seeing other categories pop up. I think video games is an interesting one. Game-used memorabilia, photo-matched memorabilia, I think is another one that's also super interesting for the sports fan.
Innovations in technology will have a huge impact on the future of the collecting space. We're in a bit of a digital transformation right now in a previously somewhat antiquated hobby where people have a higher bar now for what they would expect from a product or service as items are increasing in value, people out there are faking them and counterfeiting them, and we can really police this space and make sure that your collectible is authentic and genuine. So being more online and digital first, I think, is what really will take the hobby to the next level and move it forward.
This next segment.
So I hope that really explains like what PSA is doing, the transition. If you guys don't know, they've actually put up more buildings, more processing centers for grading over the last 6 months than they ever have. They've opened up 2 more spots, and that's because the influx and the demand from GameStop is just too much to handle. They've increased the amount of days that it takes for a turnaround. GameStop's totally changing the playing field for a lot of companies out there, certainly with the demand from our investors. So I just wanted you to know that. But this is all prepping you for quarter 2. Okay, quarter 2 numbers that we're going to go over. But before we go over quarter 2 numbers, we have to go over quarter 2 last year. So that's the first thing I do. I go to the Edgar system right here, sec.gov/Edgar/browse. I look up the company. I go to company search. I click on GameStop. How about I show you exactly how I do it? So we go to the home page. This is the home page of the Edgar system. And Edgar system stands for electronic data gathering, yada, yada, yada. Retrieval system, something like that, I forget. But you go here, you type in GME, and there it is, GameStop Corporation. So if you hit search, it's not going to let you find what you're looking for. You have to just type it in and then see the list that drops down and click on it. So I'll hit GameStop. As I go to GameStop, it has all the information you'll ever want. Every 8K, date-wise, 10Q, 10K, anything they've ever filed with the SEC. But I'm looking for specific annual and quarterly reports. The 10K is the annual report. The 10Q would be the quarterly report. K being year, Q being quarter. Okay. Proxies, if you ever want to go over proxies, it's once a year for GameStop, basically. The annual meeting, you vote on who's going to be the auditor for the company, who's going to give a compensation package, who are going to be on the board of directors. Those are proxy. Ownership disclosures, that's a change in beneficial ownership. So if they bought some shares, they sold some shares, they have to file. And so there's all your filings there for ownerships, 13Ds, 13Fs, things like that. 8Ks are any updates, any current report. They file an 8K, that means they put out some news. They're dropping an 8K because they're doing an offering after they've done whatever, right? Or a departure of someone, things like that. But let's go to the 10Qs, 10Ks. You guys know that I already pulled it up. Here's the 10Q for last year and the 10Q for this year coming up. So last quarter, actually. So here I clicked on 10Q September 10th, 2024. That's when the quarterly report was submitted and came out last year. So we're looking at September 10th again. 9/10 for this year will be a Wednesday. So I anticipate GameStop's earnings probably be the 9th or the 11th. They don't do them on Mondays. I'm just telling you, they haven't yet. They've done them on Wednesdays, so 9, 10, or 11, that second week of October, or September, I apologize, will be when they go live. So you can just click on the filing, click on it. It'll pull up. You'll want to load in the actual file. It's here at the top. The size is always pretty big, but open it up. There are other appendages to it that you can look at and read, only if you wanted to, depending on what they say. But this will give you a good rundown. As of last year, for last report, we had 426 million shares of a float. Right now we're at 447. So 447 from 426, meaning we have 21 million additional shares, okay, after a year. So 21 million additional shares. I know that we sold some shares, we offered shares. If you guys remember, we offered, I believe it was like 400 million shares, $400 million for shares. We did that offering at one point. But we'll talk about it right now. So last year, coming into quarter 2, we went from having no money, $1 billion, and because of the run-up and the Roaring Kitty nonsense and everything else that was going on, we came out, after offering shares, we came out with $4.2 billion cash money. As you go down, you read, we had inventories that we were carrying over. So we were carrying over $560 million on inventories. I like to write this stuff down, guys. This is me. You don't have to, okay? I'm just showing you how I follow the stock. So $560 million on inventories. Oh my God, I wasn't even showing you guys this whole time. Oh my God, I hate that. Okay, back to here. Here's the damn Edgar's page. You go to, let's go to the home page. Here's the home page. You're here. You go to sec.gov. There's sec.gov. Come over here to search bar, type in GME. Okay, boom, there it is. Don't hit the damn enter. Don't do anything. Just it'll pop up. Click on it. You click on it. Now you have all the reports right in front of you. 10Ks and 10Qs, proxies, ownership disclosures, 8Ks, everything. Go to 10Ks and 10Qs. Go on there and click on the date, September 10th. There it is. Okay, so there's the report. We're going to go down. Now we know where we're at. Sorry about that, guys. I hate that whenever I do that. Let the increase begin. It's going to happen. Okay, so let's go ahead and let's pay attention to what GameStop's doing. Okay, total current assets at the time were 4.9, came out to 5.5 billion on total current assets, up obviously from the previous year. We looked really good from the quarter before, and that's because of all the cash and the offerings. Now, liabilities back then, we didn't have much liabilities. You see, current portion of long-term debt was only $11 million. That number's increased because of the convertible notes we've done, but we'll talk about those financial instruments in a minute. To be at 5.5 billion and total liabilities to be at 1.1 billion. So we were literally 5x, okay? 5x, what they call current ratio. And current ratio at that time is going to be your assets minus your liabilities, and how many times do your liabilities make up into your assets, right? Like I can multiply my liabilities 5 times and I get my assets. So roughly 5x on current ratio. Now, if I subtract, it comes out with shareholder equity, and that is going to be your book value for whatever reason, okay? You have these guys out here telling you, as far as metrics goes and measurables, that book value is not a measurable, and that is so not true. It is only a measurable when they want it to be. When they come up and they say things like, hey, they're trading below book. Well, why does it matter? Why does it matter if they're trading below book if it doesn't matter at all? Because when you're trading at 100 times book or 70 times book, I'm showing you how much you have to lose. There's a lot of fluff in there. There's a lot of speculative growth that's not there. Palantir would be the perfect example of this. Palantir should not be trading at $420 billion today. It was just $450 billion the other day. But guys, Costco, after 40 years, is a $400 billion company. Palantir has been here for like a couple of years, public traded, and it's a $400 billion company, and they make nothing. They make absolutely nothing as far as profit. $700 million is not enough for $450 billion, but I'll stop. I'll just stick with GameStop. Got you. So GameStop, obviously, tons of shareholder equity, doing the right thing. Net sales. So their net sales are down. This is what the meltdown and everyone's been talking about. Oh, their top line revenue is down. They don't understand what it means to carve up and push out and close down dead stores that you don't need. But the net sales themselves, and or even cut off currency exchange rates by selling elsewhere. So last year, this same quarter, when you look at 3 months ended, right here, is it 3 months ended? Yeah, right here. So August 3rd. So they came in at $798 million. Gross profit is there. SG&A. I've talked about this. This number I felt is a controlled number. I don't think that it's really 270, if you know what I mean. I feel like they hide a lot of expenses in that 270, and I'll prove it to you and I'll show it to you. But last year, all things being equal, 798, and that produced roughly 248, almost 250 million on gross profit. Now we're gonna subtract that 270, and that's why they're a negative $22 million in operating loss last year, this same quarter. Wow, wow, wow. Well, we know that's not going to happen, and I'll explain and I'll show it. Now, as you come over, the net income, because they have interest on their money, almost $40 million, they went positive 14.8. Good number, actually. 14.8 positive for the quarter. That's where they came in. Interest was 40, 39.5, but 14.8, not a bad number, considering last year, the same quarter, they were at 2.8 versus the 14.8, okay? Negative 2.8 versus the 14.8, which this 2.8 was even manufactured because they hid a lot into that SG&A number right there. The 322, there was a lot hidden in there, and it's not just a theory of mine, it's what was being done. Okay, so now that we know what happened last year, we see it. It's not what I'm going over. We can go over all this. It doesn't matter. Leave it all there on the screen. I want to look at something. I want to look at certain things that like pop out at me that I need to take with me to this next year. The things I need to take with me. I'm looking right now. Stock-based compensation expense. It looks like they spent $6 million on stock last year on the same quarter. So $6 million. Depreciation, amortization. So 24.4 on a write-off. So that's okay. I'm reading it. I'm following it. Accounts payable, accrued liabilities. Net cash flows used for operating activities. So they actually lost $41 million on cash flow last year on the quarter. I don't think that's going to happen this year. I don't think it's going to happen for the quarter. CapEx, $8 million. So there's $8 million on CapEx, cap expenditures. Okay. And then what did I say? $6 million on stock, right? Okay, stock. Boom. So there's $14 million to find for profit. $14 million right there that I can find for profit rolling the other way. So let's see. Repayments of debt, they paid back 5.5. So we'll see if we have any debt to pay back, because I don't think we do. I think it's all just the warrants. I'm pretty positive on that. But there you go. And interest off of $3 million was $40 million. No, it's not enough to hurt you. So $4.2 million. They made some interest off of that, but we have double that now. So to go ahead and say we made 40, we probably make 80. So I'm just going to be fair and say $70 million on interest. It might be more, but we'll see. We'll see if we got the cash in time to make a turnaround on it. All right, let's see what we got here. Class A stock is there. Cool. Retained losses. Our retained losses is going to go away, by the way. We're actually going to come in positive on retained losses. That's huge. We're, negative 230 on retained losses. I'm looking for that number. All right, guys, so all that's good. Okay, let's see. Here's the good stuff. Here's the stuff that nobody ever wants to read. So the number one thing you want to read right here, company constellation report, blah, 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 blah. Here we go. SEC reported, due to the seasonal nature of our business, our results, operations for the 6 months ended August 3rd, 2024, are not indicative of our future results for the 52 weeks ending February 1st, 2025, this year. Our fiscal year is comprised of the 52 or 53 weeks, ending on the last Saturday of fiscal year, blah, 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 blah. 52 weeks. Oh, awesome. So they were going up against a number. This is what this tells you. In 2023, they were going up against 53 weeks instead of 52 weeks on this report. So hopefully you can't pin it all against them because they had an additional week of sales. You think people even factor that in? I don't know if they actually factored that stuff in. They did ATM right here where they offered up 45 million shares and they sold them. An additional 75 million shares. We know about that and they sold them. So right there, 45 million at 933. What's a good number on that one, huh? And they got 933.4. And then they sold 75 million for 2.137. So that's where they got their 3.1 billion dollars of cash for selling 130 or 120 million shares. Okay. Good number. We'll keep going. Let's see what else they've done. So that's where their cash increased. Long-term cash, restricted cash, you're fine. Cool. Board of directors, 2 independent directors, good. Ryan's out there doing his thing. A settlement right here. We committed a plan to sell additional properties in Europe. Segment and land, remaining total properties is 2.1 as of August 3rd, 2024. So additional 2.1 million is what you can subtract off of that sheet. Okay, that's fine. Hardware and accessories. At this time here, you'll see that they're selling more software than collectibles. We know that has since changed. We're doing more percentage-wise of collectibles and software, so that's pretty good. But, Switch 2 came out, so that might be playing with the number as well. Extended warranties decreased. Subscriptions increased. What a good number to do. And then, of course, the gift cards themselves, redeemed customer liabilities. Those are gift cards, by the way. So we're fine. Nope, we're fine, we're fine, we're fine. They're even. They're paying their bills. That's what I can tell you. All right, so I found an additional $14 million that we can put towards what we call free cash flow. And we're looking at that number, by the way. That's what we're really looking at. Because it's totally separate. It's not on the income statement. It's on the balance sheet side. So we'll see where it goes. French term loan was 24.4. We know they've paid that off now because they put it under a different category from what I know, what I was reading, which is fine. That's going to be the COVID loan they had. They got rid of the credit facilities. We had approximately 5.9 million outstanding letters of credit revolver. We also had 9.7 outstanding bank revolver. And okay, cool. That's all gone. That's all gone. I got you. This is all last year to get you the number you're looking at. Because what happens, guys, what really happens is here. This is phenomenal. So net sales for the U.S. was 545 last year. Canada lost 4.2 million. So you know you're not going to lose that 4.2. It's gone. Okay? And it only costs you 37.7 on top line to get rid of. Australia lost 5.9. Europe, we've closed off a lot of Europe and they lost 10. So when you look at the losses, there was 1.5 from America, from the U.S., but we know we've already fixed that. That's basically what we've done the whole time frame. For the 3 months ending for the previous year, we actually made an earning in the U.S. and we lost money elsewhere. We lost money in Canada. Yeah, we had already lost money. We lost money in Australia and lost money in Europe. But we're already making money in the U.S. and no one's going to tell you that. No one's going to show you the good stuff. So here's where we go. 6 months. On the 6-month chart, operating loss is massive. It's 26.9. I think that right there, when I look at it, if I remember, it had a lot to do with the partnership with Immutable X and the way the United States tagline takes on the bulk of the losses. So that's why it was showing losses for the U.S. because they were hiding the losses. They weren't putting them on Europe, Australia, or Canada. They're putting on the U.S. sheet. So you wouldn't see it. They were so profitable. That was the problem. If I'm not mistaken, I'm pretty sure I remember this vividly. So, and that was the letter that the SEC wrote to GameStop and said, tell us what you're doing. Where are you hiding the expenses? So here's your gross profit, right? Here's your SG&A. And the SG&A last year made up 33.9%. Let's look at that number. 33.9% SG&A of your sales. 33.9. Your margin was 31.2. So you had good margins. You had 33.9 on expenses. And so what did you come out with? Well, your cost of sales was 68.8. So you actually end up losing some money, 2%, $22 million, which is fine. Because that's not going to be the case this year. No way. And SG&A, and this is how I knew it. Look at that, man. Yeah, we knew it. SG&A here was 27.7, and now it was 33.9. So hiding numbers in numbers from the previous year. That's a lot. That's 7%. And okay, we'll see how it all works out. I'm pretty confident on this. So what does it say here? 6 months in, gross profit was coming at 29.4, and your SG&A was 33.7. Let's pay attention to that. The previous year, you were 24.7, 5% less on gross profit margins, but your SG&A was at 27.8. I think they were hiding it, guys. I think they were hiding the profits last year. So I think it's going to be a monster number this year. I really do. But we're going to show it to you. We're not just going to think it, we're going to show it. And that's good. All right, so Canada's gone. Not bad. U.S. is here to stay. Love it. And Australia's here, Europe's here, but not as much from what I do know. So 16%, 11%, and 4% of sales. That's what they were the previous year. The previous year, there were 4 Canada, which you'll get rid of, 11 and 15. So that means the U.S. is going to be 70, I mean, just in theory, 72% of sales this year coming around, which would be a good thing to do. U.S. was decreased by 40% compared to, blah, blah, blah. Don't even care about that. Right away, people look at the top line and they don't know. They don't know what's decreased because it's more dollars per man hour. It's just a better rate, better margins. Like, can I show you? You close more stores, guys. So we went from this number here to this, or we went from this number here to this number here, and we came down about $400 million worth of sales. But when you come down $400 million worth of sales, you go up 3% on percentage net sales. And additionally, if we come, I mean, we leverage it better for our end, but we'll have a better SG&A by leveraging down because, I mean, eventually it comes down. Look at this. During the 3 months ending in August, SG&A expenses decreased $51 million, 16% previous compared to the prior year. Wait till you guys see it. Wait till you see it. SG&A expenses as a percentage of sales increased to 34%. So we want to be around 27% is what they're trying to tell me. Well, let's go see it. Let's see if we can do that. SG&A expenses decreased $100 million over the first 6 months. Bros, wait till you see the number I give you. I already know. Cool. We know what the interest is. We're going to be fine. Yeah. Okay. So I'm just reading to see if there's any one-timers I forgot about. So I found some money. I'm happy with that. Cash flows, inflows, don't worry about it. Outflow, $58 million. We're positive on cash. We have great cash flow because we sold off everything, and it's all going to hit the sheet right now. Okay, cool. I think it is time to bring up the next 10Q. Hey, guys, this is the most boringest thing you'll ever do without your whole night. I get it. A lot of you guys are like, man, this is terrible. Let me tell you something, guys. Take your time to invest. Take your time to do your homework. If that investment's not important to you, then we shouldn't even be having these conversations. Your investment should be this important to you to take your time and read it all. So let's go look at it. Let's go. So now, cash and cash equivalents are coming in at $6 billion. We know that we increased, but we're all the way up to now, with convertible notes, up to $9.1 billion. Oh, it makes me laugh. Because the stock price is the same. We're the same stock price as last year, but, hey, whatever. We're even lower probably, and we have $9 billion instead of $6. Oh, yeah, shocker. Not a big deal, I guess. Inventories came down to 421. Not bad. Not bad. From 675 the previous year to 421. We had a decrease on inventory. That's the $250 million in cash that people are looking for, which I don't have a problem with. We have prepaid expenses. We're fine. Assets held. So we're at $7 billion, $7.5 billion on assets compared to the 5.8. When you take into consideration our liabilities, long-term debt is those are those convertible notes. We'll make enough interest over the next 5 to 7 years. Every quarter, we're making around $80 million. So if we're going to have 20 quarters of $80 million, you're making an additional $1.6 billion. I don't even know what to tell you. I don't even know if that's right math. That might not be the right math. 8 quarters, did I say 20 quarters? 20 quarters, no, that is. Holy shit. Yeah, guys, we're making back a lot of money considering the debt that we owe. And the debt we owe is not much. I'm just telling you. Like, we'll end up making back interest because of all the cash we have. The bulk of the cash is ours. Like, if you backed out the notes themselves, the bulk of the cash is ours. I think because our long-term debt's a lot more than the 1.4. But we also have Bitcoin. I'm not even going to talk about that yet. So total liabilities, 2.5 for the 7.5. We're coming out plus, almost $5 billion, which we knew. But it's going to be even better with all the cash you have. The more cash they give you, the more it compounds. And we're okay because we don't know it anytime soon. Believe it. Okay, retained losses. We're at $36 million lost on overall. $36.7 million. We're absolutely going positive on that. And that's a hell of a turnaround. That's a hell of a turnaround we'll be going through with retained earnings moving forward. I think most people, the ones that have those that are sticklers on the rules, like their own investment rules. I don't invest money into companies that are negative. Sure, you don't. Go look at the S&P 500. Like all of them, the bulk of them. What are my dogs doing, dude? My dogs are having a field day right now. Probably another dog is walking by. All right. Net sales, so 732. I want to think can I just ballpark it and say we're coming in at 732? I know the world is telling us that we're coming in at 900 million, but I don't want to do that. You know what I think? Wall Street says 900 million, and then when we don't get there, they're like, oh, they missed. Last year, literally 881 that previous quarter, but like for us, I'm going to show you all the numbers when we get there. I just want to make sure I have every expense in the way. So I'm looking at last quarter for us, and we came through on quarter one. Gross profits there, 252. SG&A comes in at 228. That put us at 35.5 on impairment losses, so we look like we're upside down 10 on operating. But that true 35 is gone. If you go to adjusted, you take away the 35.5. This is adjusted right here. You take this away. So you don't have an operating loss, you have a gain. So on operating, you're probably going to have a gain around $24 million, right? I'm just ballparking. $24 million for the quarter if you minus the one-timers. So when you have the $24 million and you add in the 57, you literally are looking at 81 on adjusted. Add in taxes, do whatever you do, I don't care. But it looks like GameStop should have been, $79 to $80 million for quarter one profit. Operational profit, in addition to the interest, come in at $80 million profit. That would be a phenomenal number. It's a swing of $112 million, whatever it may be, for the quarter. You guys are going to have some really good quarters moving forward. I don't know how Wall Street's going to continue to hold this down, but they're going to do their best. A swing of 20 cents a share, bro, and that's a diluted 20 cents. Because remember this, the float increased 20 million shares, and we still carried. It didn't matter. I mean, this is just awesome for us. Let's go through it. Net income, we came in at $44 million versus the 32 we lost the previous year. Great number. We have this foreign currency translation adjustment, which we're fine because then you're going to come in here, and we came in at $52.1 million compared to the 31.8 lost last year. And cash flow activities, we're doing great. If you look over here, we have this 35 on impairment. Well, that'll all hit the bottom line. We actually came plus 192.5 on cash. So if we're coming in at 192.5 positive on free cash flow versus losing 109.8, that's a swing of $301 million for the quarter. That swing alone should warrant a crazy stock. A movement like you've never seen on Wall Street, not the bullshit they're doing today. So I know the truth about the company. I know where it's been, where it's headed. But to have those type of swings on a quarter one, nah. I mean, these guys are not ready for what's coming through. So we'll get to it. Here we go. CapEx. No, they only did 2.9 compared to what I wrote down before was an 8.0. So we actually going to gain $5 million on CapEx plus. Okay. And then I want to see the stock compensation too, because I'll look for that somewhere. I don't know where it's at, but we'll find it. But either way, GameStop looks amazing. Cash and cash equivalents at the end of it all, $6.4 billion is a huge number. Let's go over here. Net income, we're fine on shares. Accumulated loss, 94 million, 7.3. Nothing. We're good. There is no expense here, or we paid out 5.5? We paid out 5.5? Additional paid-in capital. Stock-based compensation, 5.5 from 6. So we lowered it $500,000. Not bad. Not bad. So we gained $6 million. $6 million right now in cash. That's not bad. I found $6 million. Great number. Great number from last quarter. All right, so we're going through. Do we have 13 weeks this one? Fiscal consists of 52 weeks. January 34th, fiscal 24. All 3-month periods hereon contain 13 weeks exactly. Cool. Cool. Our fiscal year is comprised of 52 or 53 weeks. Everything is 13 weeks, and it's even. Good. No leap year. No leap year. It's an odd year. Odd year, yeah. Cash and cash equivalents, we're fine. Restricted cash, we're fine. Everything's fine. Okay. Keep going down. No worries. Oh, what's this say? Okay. During the first quarter of 25, we plan to divest the company's operations in Canada, recognize impairment expense of 18.3, which we did. The carry value of the assets held for sale and liabilities held for sale and disposal were $52 million and $58.3 million, respectively. That's $110 million, $110.7. Let me go look at that really quick. $110 million. That's going to be here, right here, right there. So they already gave us the cash for Canada, just so that we're clear. The cash was there, 110.3, and that's the 192.5 that you guys saw. So even without the 110, we still had $80 million profit of cash on the bottom line. So that was the Canada cash. It's there. We won't have impairment charges against us, the 18 million. Let's see what this says on the French side. Recognize impairment expense of 17. So that's the 35. The 18 and the 17 are the 35.5 that we're at. As of May 3rd, the carry value of the assets held for sale and liabilities in French disposal were 178 million and 148, respectively. Sale operation expected to close during fiscal year 2025. So somewhere during this year, we're getting an additional $173 million. Oh my God. And 148.9. So somewhere this year, this is the greatest business of all time, guys. Oh my God, I get so excited. We're getting $322 million of cash somewhere in these next 3 quarters, okay? Because they don't tell you when it's coming, but it's coming. And that's phenomenal. So $322 million on top of that $9.1 billion. You're looking at $9.4 to $9.5 billion, guys. We're headed to $10 billion. Oh my God, what are they gonna do? What are they going to do? The money's coming. Oh, my God. Okay, collectibles. Killing software. Why? Because of PSA-graded cards, Pokemon cards. You name it, it's there. We're murdering the scene. And it wouldn't matter how many buildings you keep open as of last year. We're doing $100 million more every quarter. It doesn't matter how many you shut down. That means online's going to be sold out. That means people are camped out every Saturday and Friday like they were today for Surging Sparks boxes. I saw them all over the internet. I couldn't do it. I couldn't afford it right now. I'm a little tight. I'm okay. Subscription. So we're down 5 million. Okay, we've closed a lot of buildings. Right here, warranties were down, and then liabilities were up. We're up on unredeemed liabilities, and that would be your gift cards. So awesome! Everything is awesome. I'm so excited about the cash that's coming, bro. $322 million. I just found that. That's crazy. Okay, during the 3 months ended, blah, 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 they were respectively a gift card redeemed. We got that part. We know that. Okay, cool. All right. We're good. We're good. You guys got to do your homework on this stuff, okay? Invest. Do your best. Look at this. Adjusted cost on assets, U.S. government securities, $60 million. Get ready for big numbers on interest coming your way, okay? I want you guys to know that. We reclassified the 15.7 on the French deposit side. We knew that part. When they sold the liabilities held for sale. Oh, wow. So that's how they did it. Okay, so the first quarter of fiscal 25, management committed to a plan to divest the company's operations in France. In connection with the plan, we reclassified the 15.7 million of debt related to the French disposal group to liabilities held for sale in the condensed consolidated balance sheets. The debt was previously included in the company's consolidated debt balances. Yeah, that's so awesome. So they sold it off so they don't own it? Our government guaranteed low interest French term loans due October 2026 had a carry value of $50 million and a fair value of 15.3. The fair value of our French loan was estimated based on the model, discounted, blah, 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 interest rates available to us at the end of the period, similar to the debt at the same maturity, which is level 2 input defined by the fair value hierarchy. Okay, cool. That's good. That's good to know. All right, here we go. Debt. The 1.5 billion is that convertible note. We did additional note for 2.7, which I'm not mad at. We're okay. Boom, boom, boom. Respectively, the French term loans with an 11-point short-term debt with reclassified. Oh, yeah, they just sold it and then they paid it with the sales. Oh, it's going to be awesome, bros. Oh, this is great. Hey, all you guys out there that doubt GameStop right now, look at this push, man, like per share. Oh, you guys can doubt it. I mean, I just want to tell you what does Tony De Niro always say? I just want to tell how convertible bonders, how the bondholders think. I don't care how they think. I don't care how Wall Street thinks. I just care about the numbers. Numbers are going to be phenomenal. Why is it every single quarter the numbers been better? Every single quarter, GameStop's made more money. Better margins, more money, more hit the bottom line. It's been phenomenal. I mean, look at this. What I'm reading is absolutely outrageous. Like, it's going to be better and bigger than anything you could ever imagine. But we'll keep going. I want the breakdown of the stores again because I'm going to start subtracting some shit. Because here we go. Net sales. Oh, right when I asked for it. Here it is. So net sales for the U.S. 537. Canada's 38 million. We're going to get rid of the 38. We don't even need it. Okay? So Canada's out at 38.2. Good. We don't want to lose all that money we're losing over there. Anyway, the impairment charges are here, 18.3 and the 17.2 from selling all the operations over there. All right, we're selling operations. We're getting that cash. We already got the Canada cash, the 110. Now we're going to get the French cash, which is $322 million. Oh, my God. Okay. So, SG&A, just so that we're clear, 160. 160 on SG&A, but store-related is 131. Other is the one where I tell you they're hiding something, right? But you go over there to 160, and store-related is 130. My God, guys. If it's only 130, and you can go cut across and go 26, and cut across go 22, so you're going to come in at 180, 180, and or if you're going to adjust it and take out Canada, you're going to come in at 215. 215 on SG&A at the most. 215 at the most, guys. And I'm just being fair. I don't see it. But that means they're going to make crazy money. Because you get away with the impairment charge. It's not happening. It doesn't even matter. Forget the impairment. So let's look at this really quick. They make money in America. A lot of money. But they're coming in to make money on the other side. I mean, these guys didn't make any money in Australia and Europe. None. We don't even need them. If you didn't have them holding us down, we'd make an additional $22 million of operating income. An additional $22 million. So you can plus 22 if they can just break even, Australia and Europe. But the U.S. where the profit is, holy. What did I say? 220? 215. Remember that number, guys. 250. Man, more notes. More notes. I got to put it all down, guys. $215 million on SG&A. Okay? And it's not SG&A. It's SG&A. Okay? SG&A. So that's sales and general administrative expenses. Okay, so CapEx was down. Property and equipment, they're doing everything. That's all about cash, okay? When it comes to the cash, we're going to have a lot more net income this quarter. Whoo, shit. I think so. Because interest alone, your interest was what? Income before taxes, interest income is $57 million. We're coming in way higher. We have an additional $3 billion on the sheet. We're coming in $70 million? I'm guessing. Because you figure you make four. You're making $4 million for every billion every quarter. So if you're making $4 million for every billion, you added 3 more, so you're making $12 more million. $12 more million on top of that. So yeah, $70 million. Yep. $70 million on interest. Oh, put it down. Put it down. $70 million. We know that GameStop's Bitcoin was $25 million. On value. Don't forget about that too. All right, so let's go. Net sales are there. Gross profit. Boom, 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 boom. Percentage. Oh, I want SG&A. I want the. That was the previous year. I didn't even get. And see, they gave us the breakdown. Remember when I told you they're hiding? Look at what they hid, 42 million in SG&A. They called it other. Just hid it right in there. If you take that away, if you take away this other, you take away the other that they're hiding, right? GameStop's a profitable company. Take away the other, they're close, not close, but they're profitable here. They would have broke even. I told you. That's just the way they've been doing it. They do it on purpose. Like, I wish people knew. Like, it's when you run a balance sheet, like when you run a P&L, guys, that's profit and losses. When you run a P&L, you can go ahead and input some shit and tack some stuff on to the next quarter or versus not this quarter. You can do all of that. Reclassify expenses a certain way. You could do it all. Credit card charges. Oh, no, that's employee engagement. That's this, that's that. You can reclassify everything if you wanted to. Or you could show a profit and be like, yeah, this is what I got. Boom, 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 boom. Or you could just say, hey, sandbag it. Come in low. Why? Because when you annualize on that number, you got to think like GameStop, right? Like, I think like Ryan all the time. I try to, like when it comes to finance and the way they're doing their math, I'm saying to myself, like, what are they doing? Here's what they're doing. They're molding their P&L to annualize on the next number. And if you don't know what that means, it's like this. So you build in a program, right? So in business, let's just say you have 100 employees, and it takes 100 employees to run your business. Here's my 100. Well, I want to do something else. I want to do PSA graded cards. I want to do shipping before we open. I want to do a different shift. I have an influx. I want to make up for it. So what can I do? I can budget in 2 more employees. I go 2 more employees, and they're full time. That's going to be 80 hours a week. So I got to budget that in. I got to budget it in for the next 26 weeks, for the next half a year, only while we're in season, whatever it may be. But I got to budget in those 80 hours. Now I annualize on that number, and now I have the next number to beat next year. I got to show increases, and I have new products, I have new streams, I have new everything. So you eventually find a way. It might be 3 years away, 4 years away, but you found a way to annualize these gradual increases into your business model. That's what P&L is doing for GameStop. GameStop found a way to go, you know what? Hit me hard now so that when I cut back later, we come out, we look like champions. They already knew they were profitable. They already knew this was happening. They absolutely have to know. Like, oh, man, don't worry about it. Spend that money over here or make it look like we didn't or front load it. Do it. Doesn't matter. Doesn't matter because they wanted to come in flat on a number. And I tell you this all the time that I can prove it. And I'm going to show it to you a different way because we're going to go to the quarter. We're going to go back. And this is all based off of operations. Okay. This has nothing to do with interest they make. This is all about operating. And the reason why it's about operating, and this is because right here, this all has to deal with the way whenever you do a P&L, right, you can control this number only. This is the only number you can control, what you put into SG&A. It's called controllables. It's what you do, payroll, personnel, everything you do. You get to control that number. You can't control the cost of things. Like you could, but the cost of revenue, the COGS, the cost of goods sold, how do you get better margins? Well, you got to sell different products. You got to renegotiate. But as far as what you report is this number here. It's this number, the SG&A number. So when I was looking at GameStop just right when Ryan Cohen walked in, he walked in Q4 of 2023. You saw GameStop come out and go positive. They had $6.5 million of profit that Q4. Then you go to the next year, and they come in at -70, -30, positive, or -29. But what did you see? You saw $100 million on ops. And you were like, wait a minute, hold on. So let me do the math for everybody really quick so people understand. They came in at operating expenses of $318 when the real SG&A was only $263. They put additional expenses in the operating expense. Okay? They put in additional just to come up at this flat number of 100. They could have killed the number, but they front-loaded expenses in SG&A. They did it quarter four to come out with the bottom line number. You saw them get so close to zero, it was $6.7 million. And why? Because of the interest that they were trying to offset. Here's the interest number. 10, 11, 21, 30, 40, $47 million. Well, guess what? Look at this. They were trying to get it here. Here's 100, and they're trying to come up on top of this. All they were trying to do is get closer to zero. That's it. How much can I fit into 2024 budget so that when I annualize 2025, I have more? You want to take from one and give to the other. And you're like, okay, I'm just going to front load it all in 24. We'll pay it with that paycheck. We'll come out with the next one. So look at this. Now they lose $50 million operationally. They lose $50 million, okay? What did they hide into this number of SG&A that was an increase or a decrease from the previous? What were they doing? This was the immutable X commitments. I've already looked at everything, immutable X, all this stuff. So when you come through at 295, you say you lost $50 million. Operationally, we lost $50 million. Well, go ahead and look at the next 2 months. The next 2 months were the $50 million back. They literally averaged it out for you where they pumped in just enough money to give you back the $50 million. So you go, here's 50, here's 23, 28, and here's 24. And you go, wait a minute, Marantz, this is negative 100. No, you're not hearing me. Because when we go all the way at the bottom, okay, right here, negative $32 million is what they finished out with after interest. You then get 32.3. You get the exact same amount with the next 2 quarters. They pay for each other. I'm going to pay for quarter 1 with quarter 2 and quarter 3. This is what GameStop does financially. They wait till the last quarter of the year. Right here, to give you an example, you come through, they make $48 million. The next quarter, they pay for it. Oh, we're back to zero. Back to zero. Back to zero. Getting as close to zero as we can, then we kill the number. Now we have a big number. We came up $6 million positive. Wow. Oh, same thing. 32, back to zero. Back to zero. Killed the number, 131. Now, this year, you're at $44 million. 44.8. Should have been 80. Could have been more. They hit an additional $26 million in the SG&A. They're hiding stuff. And it's okay. That's how you want to run your business. You have an asset write-down for the quarter. These are adjusted. Everything's going to come out. When it's all said and done, guys, when it's all said and done, you come in and you go, adjusted EBITDA is going to kill the number the following year. You have so much cash pouring into this company by cutting down stores and selling off assets. The amount of cash that is not shown up on the sheet is going to dwarf not only this number that's been accumulating by doing offerings and convertible notes, their interest and cash coming in is literally going to be like $500 million of cash just flowing in. And people are going to be like, what are they doing with it? Who cares? They got $10 billion. I want to show you something else here too. When I look at it from me, like the way I would do business with them is I want to look at what the SG&A was here on this number. They literally come in at 252 and they had SG&A at 228. But that 228 right there is going to be 215. You take away Canada, we're fine. But you're telling me, Wall Street's telling me we're at $900 million. Guys, I don't know what to tell you, but at $900 million and we fell flat on ratios if we did, which is, I think it goes up because of services. You annualize on the PSA. You didn't even have PSA back then, quarter 2. Like, you have a full year now of PSA grading, services are there, the cards online, everything annualizes. You want to come in at $900 million, and you're gonna meet me at $320 million of gross profit? That's fine. I'll meet you there. But you're telling me that I can get 34%? Because last quarter we're 34%. So if I go in here, and I'm grabbing my handy dandy calculator here, I'm going to take $900 million, and I'm going to get you 35%. Okay? You mean to tell me I'm going to have $315 million on gross profit? 315. Well, if I took away the 215 on SG&A, that gives me $100 million operationally. Now I add in Bitcoin at 25 million and I add in an additional 75 million for interest. I'm looking at $200 million this quarter alone profit. And cash is going to come flowing in from France. Flowing in, $322 million scheduled to come in sometime in the next 3 quarters. This is the quarter. This is the time. If GameStop can come in and show that they made $200 million, I'm not joking with the number, $200 million operationally with interest after. You're going to make all this money, 100 million ops, 75 on interest, and another 25 on Bitcoin. It's going to be a great day. And it's going to be a mountain. It's going to be an explosion. But you know what's the part that pisses me off is all these people are walking away from their platforms and saying, good luck, it's been so long, it's been so long. What the hell are you guys doing? This is about to happen. It's been happening. GameStop has been pushing for this moment forever. What you fail to realize is it doesn't happen overnight. GameStop PowerPacks.com, I just showed you all the innovation with PSA and partnerships. He was hiring for engineers 2 to 3 years ago, branding and marketing 2 to 3 years ago. They finally built it. It's integrated. It works. It's there. That's profit. GameStop, PSA graded cards, tablets in the stores, training for all the employees. That's profit. Everything has happened over all these years. They've waited for this moment right now in front of you. And he goes out and he does his first interview in forever just to tell you, you know what, guys? We beat you. If you want to short it, short it. Do all you want. But I tell you what, I'm going to keep buying this son of a bitch. I know it's $1 billion a year company on profit. I know it's $1 trillion dream, and that's just what it is. And one day it won't be. One day it's going to be reality. And the last thing that's standing, the last person here is going to be you and me. GameStop. Can't stop, won't stop. GameStop. I'll see you around, millionaires.